The COVID-19 crisis has brought a whole lot of turmoil to everybody in varying degrees and in all manners of ways. Yet the one thing that's definitely created on a global scale is uncertainty. For governments, businesses, schools, travel, leisure time, and so on. And it's affected just about every single person on the planet. In these highly uncertain times, we, as consumers, are being impacted in many ways. The knock-on effect on livelihood, income, and spending patterns is huge. And for banks, that is affecting customer repayment behavior. Banks are having to shoulder much of the financial fallout from this crisis. As a result, the one thing that's absolutely certain is the direct impact on predictive models. So the big question is, how robust are they? Within the consumer lending space, there are 4 commonly used predictive models for decisioning and reporting: application scores, behavior scores, credit bureau scores, and collection scores. There are 3 main ways that predictive models are impacted. First of all, let's consider the relationship between the score and odds. This is where traditional scaling frameworks will no longer hold true. So, while scores may fluctuate for various segments, the associated risk is not necessarily going to follow the same trend. In this case, there needs to be an ongoing assessment of the bank's lending and cutoff policies. The second one relates to payment holidays or deferments that central banks impose on scorecard characteristics. For example, payment-related characteristics for behavior scorecards will be impacted, which in turn will influence the score-to-odds relationship. And the third way is the delay of the inevitable through payment deferments. This is where we can expect a direct route to write-off as soon as deferment periods are over. As a result, there will be a significant or severe operational impact within the collections arena due to having to cope with high volumes. As well as the impact on predictive models, there is also an unknown impact on these various models, and this will trigger actions that will need to be taken across the entire credit life cycle. Let's start with originations. This will mean revisiting acceptance cutoffs, risk-based pricing strategies, and risk-based limit settings. During the credit life cycle, this is where account management comes to the fore. This will involve credit limit management, cross-selling, upselling, and any other strategies linked to bespoke risk-based actions. And at the end of the credit life cycle is collections. This will be the alignment between account inflow, operations, and risk across pre-delinquent, early, middle, and late-stage collections. We've now established the challenges that banks are facing. So what are the solutions? Well, one thing's for sure: immediate action right now. And Qarar recommends a 3-stage approach. Stage 1. Assess. All models and strategies that are currently in use across the credit lifecycle must be identified, analyzed, and assessed against the recognized impacts over the last 3 months. These might include payment deferments, economic conditions, and model stability. Stage 2. Collaborate. The current situation is totally unprecedented, and there is simply no previous or comparable data to rely on. Therefore, we have to rely on expert judgment in order to recalibrate models based on the findings in Stage 1. And Stage 3, adapt. Lending strategies across the credit lifecycle must be adapted. This applies to both the current situation as well as the expected predictive capability of models. So that means putting in place originations, account management, and collections, all the way through to reporting, provisions, and expected credit loss calculations. Qarar's expertise in credit risk management and advanced analytics has earned us an inviolable reputation in the region. Our recent industry survey revealed that banks estimate they will need about 6 to 12 months to fully recover from COVID-19 crisis. And that turnaround time is highly dependent on the action taken right now. So we invite you to connect with us and let's have an exploratory discussion on how the 3-stage approach could benefit your organization.